Are you going first?
Yeah.
So you should.
No. She's going first.
Going first.
Yeah, come on.
Yeah, so just so whoever is talking, I don't know, you have to hold this and speak to the mic.
Oh.
Yeah.
That's hard to reach.
Let her-
Come on, have it. Nope. I will. I'm not speaking now. I'm going to trust in you guys. You will do it, have to do it.
Really shaking. I don't shake. I don't know why.
You should do it. You should do it. Because if I'm here doing it, alright?
No one is going to start.
One out, please. Precious. Okay.
Next line. What's the next line? Okay. Next time. Good afternoon, everybody. Good afternoon, everybody. We are the representative of Integrated Capital Limited, and we are here to represent our client, Mutual Benefit Assurance PLC, to take a presentation to present a proposed acquisition of Guinea Insurance Limited. Next slide, please. And in line with our presentation, we'll be going through the market trend, the industrial trend, the overviews of parties, the transaction rationale, the valuation, proposed transaction structure, and talk about ourselves.
All right, on the macro front, Nigeria real GDP grew by 1.95% year-on-year in first quarter, and this was driven largely by the oil sector, the agri sector, the financial service sector, and the manufacturing sector. There was also an increase in capital outflow to $6.3 billion from $907 billion USD. This was driven largely by increase in portfolio investments. There was also an increase in the exchange rate. It grew by 21.6% quarter on quarter, and this was also as a result of higher oil receipt and increased in foreign investments. Interest rate has remained 14% from 2. Interest rate has remained 14% for 2 years now, and if headline inflation continues to decrease for the 18th consecutive time, it increased to 11.14% year-on-year from a high of 18.7% year-on-year as a result of improved FX liquidity. There was also an exchange rate has remained relatively stable in July 2018. This was as a result of increase in improved FX liquidity, the introduction of import and export window in April 2017. Crude oil production averaged 2.0 million per barrel in Q1 2018. This was as a result of relative peace in Niger Delta and production cuts by OPEC and non-OPEC countries. Also, we'll be looking at the industry analysis. The industry sector in Nigeria is currently regulated by NICOM, and we have 53 in the insurance firms in Nigeria presently. The insurance sector players are structured into 4. We have the insurers and reinsurers, insurance brokers, agents, and loss adjusters. The minimum capital requirement was 2 million, 3 billion, and 5 billion for life insurance, non-life insurance, and corporate insurance, respectively. As from January 2019, it is expected that the minimum capital requirement that will take effect will be 6 billion naira, 9 billion naira, 15 billion naira for life, non-life, and corporate insurance, respectively. The Nigerian insurance penetration rate was 0.7%, ranked 62nd globally as of 2015, according to PwC reports. And contribution of African insurance market to global market in terms of premium is at 1.52%.
Okay, and we're going to talk about their acquirer, which is Mutual Benefit Assurance. They are the leading leading world-class insurance company who offer life and property insurance. This company also offer services like group life thing. They offer mortgage protection. They offer burglary. They help and the likes. You can see them on the slide. And also the management team. We have them on the slide. We have the MD, CEO. We have the manager. I also have the finance director. Okay, talking about our target team, which is Guinea Insurance PLC. Okay, they provide services throughout Nigeria, and most of the services they provide are general accident services, motor, fire, life and pension, risk insurance, and the likes. And these are the management of Guinea Insurance. We have the MD, sorry, the previous slide. We have the MD, we have the chairman, and also the financial director.
Okay, what are the rationale for takeover? One, buyer synergy. This will lead to increased valuation of Guinea Insurance when it is taken over by mutual assurance benefits. It will also lead to improvement in employees' benefits, improvement in Guinea Insurance employees' benefit, and also expanded offerings to existing customers of Guinea Insurance. Another rationale for takeover is long-term enhanced valuation. There is a saying that 2 + 2 is equals to 5 or something greater. So, as a result of the takeover of Guinea Insurance by mutual benefit assurance, the valuation of Guinea Insurance will improve in the long run. Also, removal of personal guarantee. Guinea Insurance don't really need to personally sign to borrow money for its growth anymore. And then regulatory requirements of NICOM. It is said that in January 2019, the minimum capital base will increase to 6 billion, 9 billion, respectively, for non-life insurance and corporate insurance, and the pursuit of other interests. So we move on to the valuation part.
So this is the financial reports of Guinea Insurance for the past 4 years, right from their top line, which is the gross premium written, to the profit or loss after tax. And we can see that Guinea Insurance in 2014 and 2015 made loss, and in 2016 and 2017 they made a profit. Yet the company could not pay dividend to its shareholders for these 4 years, and that led us to value the company because we could not value the company using intrinsic valuation, because for insurance company we have used a dividend discount model that we forecast the dividend of this insurance company into the future, discount that back to the present, and we get the value of the company. But apparently, since they've not been paying dividend, there's no way we could determine the dividend growth rate for the company and how much dividend they are paying, and that's led us to use relative valuation using trading comps at these public companies and precedent transaction. And the 2 multiples that we used in this relative valuation were the price to gross written premium, which is highly sensitive to variations in the gross written premium annually, and the price to book value, which is the market cap divided by the shareholders' fund in the balance sheet. Now, using the relative, trading comps, we selected 5 companies insurance, which are IK Insurance, YPIC, Staco, Universal Insurance, Nigeria Insurance, and we got the average of the average multiple in price to gross written premium and the price to book value for these insurance companies, and multiply that by the gross written premium for Guinea Insurance and the book value respectively to get the fair value per share for Guinea Insurance PLC, which are 0.07, which is 7 kobo, and 0.39 kobo respectively. Based on this valuation, we will see afterwards that Guinea Insurance is largely overvalued in the market, as currently trading as 35 kobo in Nigerian Stock Exchange. Now, in present transaction, we looked at 3 main transactions that happened in 2017 and 2016. We saw the acquisition of 75% stake in Greater Nigeria Insurance PLC by Insurance Source Consultant Services Limited, which was valued at 3.2 billion naira. And we also saw that the acquisition of equity assurance by Sunu Insurance in 2016 valued at 1.25 billion naira. And we also saw Liberty Holding acquiring 75% stake in a Unique Insurance PLC in 2017, valued at 3.72 billion naira. We applied same multiples that we used for the trading comps to arrive at a valuation for Guinea Insurance, as we will see in a football field valuation analysis. Now, based on this, we can actually see at a glance that using a public comps valuation, that is the price to book value and price to gross written premium, Guinea Insurance actually valued between 20 kobo, and 30 kobo. Then using the precedent transaction, Guinea insurance is valued because we're looking at this midpoint. It's valued between 7 kobo and 30 kobo. And this gave us an idea that Guinea insurance actually is overvalued in the market. But regardless, since we are acquiring Guinea insurance, we're going to pay a premium of 20% to acquire Guinea insurance, and that will lead to an acquisition price to gross premium of 2.66 times and an acquisition price to book value of 0.76 times. Then how will mutual benefit assurance finance this acquisition? We'll finance the 10% with cash, which is 260 million naira. We'll issue debt to finance the remaining the 40%, that is 1.03 billion naira. Then we'll issue equity to the current shareholders of Guinea Insurance PLC to finance the remaining 50%, which is 1.29 billion naira. Thank you.
Okay, there are 3 parties involved in this deal. Ourselves, Integrated Capital Limited, the legal parties, and the management of Guinea Insurance. And it is splitted into 4 phases: the organization, contact marketing, business due diligence, and the final negotiation phase. So, this transaction is set with full participation from both parties, from all parties involved. This transaction is expected to last between September and February 2019.
Okay, our past deals as Integrated Capital Limited, we've worked on a $45 million measure between Supreme Enterprise PLC and Floor Nigeria PLC, and also a PMP Africa fund of $20 million that is investment of 11% minority stake in U Nigeria PLC, and also a 50 million naira acquisition of ZYX Limited by ABC Limited. And these are we are the members of the team members of the board team members of Integrated Capital Limited, and this is John Ogechi, and this is Hussein. We have Samuel and Tayo, but they're not around us now. Okay, and you can find us at Integrated Capital Limited, Plot 52, Partner Road, Lagos, and you can get us across by this. Thank you very much.
Good afternoon, guys. So this is Group C. See, I'm just going to. Yes. These people are not. Right? Good afternoon, guys. Yeah, please listen up. This is Group C. And we are here to give you guys an acquisition. This is the proposal we are presenting to you guys, your mutual benefit insurance. And then you're looking at you're coming up with this is the proposal on acquisition of Guinea Insurance PLC. So I'm sorry, I'm alone. I have to. Our slide is very short. I'm not tracking it. And then this is just what we are running you through. We're running you through the market and industry overview of the acquirer, and overview of the target. So for the overview of the acquirer, so as you know, mutual benefit insurance is basically, this is the industry commentary. Industry update. Now, having the National Insurance Commission has raised capital base. So I believe that you are all aware, you're active players in the industry, and then you've observed that there are increments in your capital base to about 200%. The Commission also introduced the 3-tier base recapitalization for the insurance industry. So composite insurance companies that are now interested to play in the Tier 1 category are expected to increase their capitalization from 5 billion to 15 billion. Those in the same tier but operating life insurance are required to recapitalize from 2 billion to 6 billion. The non-life insurers planning to play in this tier are expected to improve capitalization from 3 billion to 9 billion. I'm sure the company is aware of this, which is why you're proposing for a merger or an acquisition of a target, which is basically Guinea Insurance. Also, for insurers willing to play in the lowest tier, which is tier 3, they are expected to maintain the current capital base of the insurance industry. To this end, non-life insurance firms in tier 3 have to maintain 3 billion naira, life insurance operators 2 billion, and composite insurance 5 billion. I'm sure you're already aware of this. Looking at the update of the insurance index, the Nigerian Stock Exchange Insurance Index, it has grown positively by 9.13% from July 2017 to June 2018, closing at a closing price of 150.44 Nigerian naira, obviously. So bargaining, hunting insurance stocks has made the Nigerian Stock Exchange Insurance Index to emerge the best performing sector indicator yet to date. So because of the new regulation asking people to increase their capital base if they really want to continue operating as insurance firms, there are a lot of bargainings and huntings going on in the industry, driving the prices of stocks in the industry upward. So that's more like, so that's the trend, showing you the what's it called, the 1-year view of the performance of the Nigerian Stock Exchange Index. So we're almost wrapping up. Talking about the acquirer. You are the acquirer, Mutual Benefits Assurance PLC. So we found that. So looking at this is more like a snapshot of basically everything that you have to know about your firm, obviously. So the firm is a leading brand in Nigerian industry with over 5,000 staff. So I'm not going to dwell so much on this because this is basically your firm. And then the EPS of the firm has been 0.13 and the dividend percentage of 6.67. So so it has basically an authorized share capital of 5 billion, and then it has fully paid up share capital of 4 billion, meaning that it has like 1 billion to utilize in possibly using in doing a stock acquisition when acquiring. So that is a chart showing us the year-to-date, a 1-year performance of the stock. It's currently trading at 30 kobo, and then it has a 52 weeks range of 24 kobo to 50 kobo. So now looking at the acquirer looking at the targets, we have the executive directors. We have Babatunde, Oshadiya, Isioma, Omochi, and I'm sure that the executives of the firm are already communicating and contacting them. Oh my God. So the targets, Guinea Insurance PLC provide. Are we being timed? Someone should say time up. Guinea Insurance PLC provides insurance services throughout Nigeria, and it's currently trading at 35 kobo and 52 weeks range of 35 naira to 50 kobo. So looking at the income statement of the firm, there's been a very steep upward curve. The revenue of the top line of the firm is basically about 1.3 billion, net income about 251 billion, and profit margin of 18.34%. On the balance sheet, we have a total asset of 4.4 billion, total liabilities of 9 billion, then debt to asset ratio of 0.00. The increase in shareholders' funds as recorded in the financial statements. So this firm has actually had a very remarkable performance. The claims paid on various classes of insurance decreased from 304 naira in 2016 to 161.5 million in 2017 due to operational efficiency of people, technology and communications, which makes the firm a best fit to be acquired. Why? Because this can you guys pay attention, please? Because Guinea Insurance PLC has inculcated technology and other efficient measures to basically make its operations better, helping it to increase its profits over the year. There was also a remarkable performance was delivered as the underwriter posted profit before tax increment of to 237.8 million in 2017 from 176.3 million in 2016. Also, there was an increase in shareholders' funds as recorded in the financial statement, which increased to 3.4 billion in 2017 from 2.9 billion in 2016. Okay, so this is basically all it is. So they're actually advising that you go ahead with the acquisition with shares. Can someone just tell me time up, because my team members didn't turn in their delivery on this show. This was all I came up with personally. Yes, sir. Yes, sorry about that.
Alright, that's fine.
Thank you.
Group B.
Oh, I left you guys this thing. I said I won't be yours.
Group C.
All right. Good afternoon, everyone. My name is Oluwatobi, and here with me is
Khadija.
okay, so this afternoon we'll be giving a short presentation on the acquisition of Guinea Insurance by our client, Mutual Benefit Assurance. And as a matter of fact, we are Team R8, the M&A team for Teddy Bear Inc. And quickly, my teammate here, Khadija, will be walking us through the market and the industry trend for as we go into the presentation. So Khadija, please walk us through the market update and industry trend.
All right, so the insurance sector in the Nigerian economy, like every other sector of the economy, is affected by macroeconomic trends, and it has struggled to overcome the challenges posed by the lingering effect of the economic recession experienced lately. All right, so the Nigerian insurance industry, the downturn of Nigerians' fortune had its roots in the decline of global oil prices in 2014, where there was a decline in consumption of insurance products by Nigerians, and this has negatively impacted insurance industry patronage. The renewal of most policy contracts in life and general business suffered significantly due to lack of funds for renewal of their policies. So inflation as at 2016 stood at 18.6%, which as it stood at 18.6%, which had effect on long-term savings. We all know that the negative effect of inflation on savings is savings loses value over time. As a result of this, efforts by the sector operators and regulators to deepen insurance penetration in Nigeria and improve on the sector's contribution to the GDP yielded not much results. Next slide, please. So Nigeria, the insurance industry in Nigeria started in 1921, which is older than the industry in countries like China, India, and Malaysia. However, only 1% of the Nigerian populace has any form of insurance products. So the penetration rate currently ranges between 0.3 and 0.7%, compared to South Africa, Zambia, and Namibia's 16.99%, 4.09%, and 6.69% respectively. However, regardless of the lingering apathy for insurance by Nigerians, the industry remains resilient, recording a compounded annual growth rate of 10.2% in GPI since 2012. In 2016, the industry's GPI grew by an estimated 10% to 3.56 billion naira. This can be seen as a result of the compulsory insurance policy, as in the case of motor and life insurance. Also, life insurance business experienced a significant feat as a result of the Pension Reform Act of 2016, which allowed pensioners to use their pension money for annuity purpose. Next slide, please. Okay, overall, the insurance industry's return on equity, which hovered at around 8.4 in 2016, weakened slightly in 2017 as the economy recovered from recession. However, the industry's low ROE reflects its weak profitability compared to the average yield on 364-day treasury bills of 13.7% in 2016. In our opinion, profitability is hampered by weak investment returns, rising maintenance and acquisition expense, as well as increasing claims by those that have insurance products. Going forward, we project a stable outlook for the industry as the negative impact of the recession are being counterbalanced and moderated by positive effects. We all know that favorable fundamentals enables long-term development. So if there's increase in, like when there's technological improvement and also increase in the scale of increase in marketing of insurance products, we believe we believe the industry is going to grow more in it. The penetration rate is going to go deeper, and we are going to get more people insuring their product as the Nigerian economy is expanding and new risks are evolving. Thank you. Over to you, Chair.
Thank you very much, Khadija. Moving on to the overview of the acquirer, that's mutual benefits. Mutual benefits is mainly involved in general and life insurance underwriting, even though they operate under separate licenses and held by the company and its subsidiaries. They also involve themselves in risk management and the provision of financial services. Mutual benefits is also currently listed on the Nigeria Stock Exchange and has an authorized share capital of 10 billion naira. Mutual benefits has progressed into a group of 6 subsidiary companies, that is, namely Mutual Benefits Life Assurance Limited, Mutual Benefits Assurance Company Liberia, Mutual Benefits Assurance both in Niger and in South Africa, Mutual Benefits Home and Properties Limited, and Mutual Benefits Microfinance Bank Limited. And Mutual Benefit has over 5,000 staff and agents currently under their employment. As at the date of our valuation, Mutual Benefits had the following statistics. It had a share price of 33 kobo per share. It had a PE ratio of 2.54 times. It had an EPS of 13 kobo, a debt to asset ratio of 11.28%, a 52-week range of between 24 kobo per share to 50 kobo per share, a total shares outstanding of 8 billion, a market cap of approximately 2.6 billion, total assets of approximately 57.7 billion, and a 30-day average volume of 1.6 million. Mutual Benefits has 4 products, which it mostly markets to its customers: motor, fire, marine, and life. Under motor, it has comprehensive and third party. Under marine, it has general accident, aviation, fire, and special perils, oil and gas. Under marine, it has open transit, single transit, and marine hull. Under life, it has group life insurance, key man assurance, whole life, and mutual term assurance. Then we'll move on to the overview of our target. That's Guinea. So Guinea Insurance Company became operative on 3rd of December 1958 with overseas shareholding of 51%, and that was majority until there was an indigenization of the companies, which decree which took place in 1976, which stated that the indigenous, that's Nigerians, should own 60% stake in the company, while the foreigners can hold 40%. However, the overseas shareholders divested their holdings to Nigerians, making the company 100% Nigerian in 1998. So this Guinea was listed on the NSC on the 1st of January 1990, and following the recent acquisition by Chrome, a new executive and management team and chairman involved. So the company recapitalized from 500 million to a paid up of 3.2 billion, making Guinea one of the most highly capitalized companies in Nigeria today. So the day of valuation, the company had a share price of 35 kobo per share, a P ratio of 8.56 times, and earnings per share of 4 kobo, zero debt to asset ratio, 52-week range of 35 kobo to 50 kobo per share, shares outstanding of 6.1 billion, market cap of 2 billion, total assets of 4.4 billion, and a 30-day average volume of 32,000. Mutual Benefits has 4 products. That's general, fire, motor, and special risks. I'll be handing over to Toby now.
All right, thank you very much, Chinenye. So why should this deal go into action? We all understood that on the back of the recent recapitalization exercise proposed by the National Insurance Commission, that in an unprecedented move, they announced a new capital requirement, which will increase the minimum base for the Tier 1, Tier 2, and Tier 3 from 2 billion to 6 billion, from 3 billion to 9 billion, and from 5 billion to 15 billion. And it's expected that this risk-based supervision and the 3-tier solvency margin-based recapitalization take effect from January 1st, 2019. Final. All right, thank you. All right.
Some students. No, I can't. I don't submit it to them. Yes, ma'am. Go ahead. You wanted to talk. No, like here now. Oh, I'm sorry. Oh. Hello. Test the microphone. 1, 2. I know. This is Group E. Do you need the tech guy? Undergraduate, do not use computer. Okay, good afternoon everybody. We are the Royal Capital team, Media and Education team. Group E. Overview of acquirer, overview of acquiree, valuation, transaction opportunities, and our team overview. Industry overview. Okay, so despite a lot of Nigerian citizens not insuring themselves and their assets, despite the linking apathy for insurance in the Nigerian populace, driven by cultural and religious beliefs, the industry is still very resilient as of today. It recorded a compounded annual growth rate of 10.2% in gross income since 2012. In 2016, the industry's GPI grew by an estimated 10% to 256 billion. Growth was upheld by the enforcement of compulsory insurance policies, particularly in group life and motor insurance. 17. Next slide. Okay, so this is the market share for the top 10 insurance companies and the bottom 10. Leadway Assurance leads the industry with a little bit over 10% of the market share. Mutual Benefit, your potential acquisitions, Light 10s with a 3.3 market share. Guinea Insurance can be found in the bottom 10 with a market share of 0.45%. This graph shows the market share of the Nigerian industry as at 2016. Okay, so Cynthia will be taking over from me talking about the overview of the acquirer and the acquiree. Thank you.
Okay. In this case, our acquirer is Mutual Benefit Assurance. It was incorporated as a private limited liability company on the 18th of April 1995. It became a public limited liability company on the 24th of May 2001, and it was listed on the NSE on the 28th of May 2002 with a ticker symbol of M Benefit. Its authorized share capital is 5 billion naira. Fully paid up share capital is 4 billion naira. Its current share price is 30 kobo per share, and it is licensed by NICOM to operate both life and general insurance business. As at June this year, the Mutual Benefit Assurance PLC was granted approval by the SEC on its plan to raise 2 billion naira through rights issues. This is going to help in its recapitalization plan. And these are its key financials: its gross premium, operating profit, profit after tax. Now taking a look at the acquiree, which is Guinea Insurance PLC. It was established in 1958. In 1958, it was owned by both foreign investors and Nigerian investors. But after the introduction of the indigenization decree in 1976, whereby government restructured the capital structure of businesses in Nigeria, it was owned by foreign nationals and Nigerians in the rate of 60-40. So 60% was owned by Nigerian indigenes and 40% was owned by foreign nationals. But subsequently, foreigners relinquished their ownership in the business and it became a 100% fully owned Nigerian insurance company. Currently, it has an authorized share capital of 3.2 billion naira.
fully paid up share capital of 3.7 billion naira. Its current market share price is at 35 kobo. Current market cap is at 2.14 billion naira. It has 6.14 billion outstanding shares. And these are its key financials: its gross premium, its operating expenses, and its profit after tax as at 2016 and 2017. And on the 15th of February 2018, Guinea Insurance PLC announced the appointment of a new managing director in the person of Mr. Babatunde Oshadia.
Okay, I'll be walking us through the evaluation of Guinea Insurance PLC. But before I start, I would like to talk about the performance of Guinea Insurance in Nigerian Stock Exchange. You can see in the graph in the slide that from January 2014 to January 2018, the share price of Guinea Insurance was stable at 50 kobo per share. But at the end of January towards the beginning of February, the share price dropped. The share price dropped to 40 kobo. This is a result of the implementation of the 1 kobo rule by the NSE. Then also, at the end of the second quarter, the share price dropped also to 0.35, which is because Guinea Insurance declared a loss of 56.57 billion naira. So the next slide will show us the valuation for Buffalo. What we did basically was we used the price to book value as multiple to value Guinea Insurance. We could not perform an intrinsic value valuation on Guinea Insurance due to the fact that they've not been paying dividends for past 4 years. So the first bar shows us the 52-week range, how Guinea Insurance has been trading for the past 52 weeks. Then the present transaction valuation gives it a price range from 0.28 kobo per share to 1 naira 47 kobo per share, and our comp valuation gives it 15 kobo to 56 kobo per share. Next slide. This is the analysis of our comparable company. But we used 4 companies that operate at the same level with Guinea Insurance, and these companies are Lasako Assurance PLC, Nigeria Insurance PLC, Law Union and Rock Insurance, then Sovereign Trust Insurance. Of the 4 insurance companies used, before that, the multiples we used in this valuation was the price to book value, the price to earnings ratio, and the EV to underwriting profit. Of all 4 companies, only Nigeria Insurance posted negative multiple in the price to earnings ratio. The next slide. This is the present transaction analysis, which is almost as similar to the comparable company analysis. We used the acquisition of Free Insurance by Cornerstone Insurance PLC and the Great Nigeria Insurance PLC. The acquisition of Great Nigeria Insurance PLC by Insurance Resource Consultancy Services Limited as our present transactions, and the multiples we used in this valuation was the EV to gross premium between the EV to underwriting income, the price to book value, and the price to earnings of both transactions. From both transactions, only the acquisition of Great Nigeria Insurance by Insurance Resource Consultancy Services Limited gave a negative multiple value. Thank you.
Okay, good afternoon, everyone. We'll be going through the transaction opportunities. Next slide. So first, we'll be looking at the M&A opportunities aside from the acquisition of the Guinea Insurance Company. We're looking at 3 things: the consolidation, the tender offer, and the acquisition of assets. So basically, consolidation is when the 2 companies merge together to create a new company and issue out the common equity shares to a new firm. The tender offer is when mutual benefits actually transact with the shareholders of the Guinea Insurance PLC to give them they transact over a premium, basically. And the acquisition of assets is when mutual benefits acquire the assets of Guinea Insurance PLC. Based on the acquisition of the assets, the total assets in general will actually grow when they actually go ahead with the acquisition, will grow by 24%. The rationale of takeover, we looked at 2 things: the synergy, the growth, and diversification. Synergy is basically involved to have a wider range of customers if they actually go into the transaction with mutual benefits. The growth potential is actually right now, as at now, the Guinea Insurance buy out shares from the existing shareholders that are willing to sell to mutual benefit insurance, and they sell out to shares to shareholders that are not willing to sell to mutual benefit insurance. Thank you very much.
So in conclusion, we believe that if this deal was to go forward, that both parties will greatly benefit from this, in the sense that under the new company, the market share for both companies will increase, like I said, by 13.64% and become the 9th largest in the industry. Also, enlarging their customer base by joining their 2 customer base together. Thank you for your time, and this is our team. Thank you.
Okay. Good day, everybody. Good day, everybody. I acknowledge the presence of relevant stakeholders in the House. I believe we are all aware of the new NICOM policy, which will commence by the 1st of January 2019. And so we've come here to make us all 10 steps ahead of this policy, that is mutual benefits for all. We are here to propose a possible partnership with your company, Guinea Insurance PLC, on behalf of our clients, Mutual Benefits Assurance PLC. We are Bruce Wayne Investments, BWI, a regional asset management and investment banking firm who have over the years carried out various transactions and IPOs valued from about 5 million naira to 10 billion naira. I am Oshiyemi Tolulokwe, and here with me are my team members Yusuf Ibrahim and Deborah Akinowu. Now,
What do we know about the current wave in the industry? The insurance industry, as you know, is regulated by NICOM, who have recently introduced the three-tier policy, which would commence by the 1st of January 2019. This three-tier policy would require the recapitalization of capital base. We require the recapitalization of capital base in order to make up for the increased risk factor in the country. This risk factor is majorly attributed to the increase in accidents over the period of 5 years and fire incidents. Okay. Okay. So, sorry. Sorry, I think I'm sorry, please. Now, without doubt, this policy will bring about a contraction of the already existing number of insurance companies who are currently performing above their risk limit. It also means that in order to perform or operate on the highest tier, an additional capital base will be needed. And performing on the highest tier also means that you subsequently have a very large market share in the industry. Now, this effort has been seen over the past few years with various mergers and acquisitions, such as the AXA and Mansard, which brought forth companies such as AXA Mansard, which are currently among the highest market shareholders in the industry. Leave it there, sorry. Other market leaders in the industry include our clients, Mutual Benefit Assurance, Zenith Assurance, Leadway Assurance, to mention a few. Now, moving on to our company, our clients, Mutual Benefit Assurance. We are one of the few composite industries. Currently, that is, we carry out life and non-life insurance services. Mutual Benefit Assurance, as you can see here, yes. Okay, yes. So Mutual Benefit Assurance, we have a market cap of 2.640 billion naira and a shares outstanding of 8 billion naira. We also recorded in 2016 an increase of our market premium from 12.1 billion in 2016 to 14.1 billion in 2017. In 2017, we also paid out dividends of 160 million naira, which reflected an increase in and it reflected a positive turnaround of our values due to the 2016 due to the 2016 depreciation, which affected our income statement. We also have total assets and total liabilities of 59 million naira and 50 million naira. Our debt to asset margin was 11.25%. I'm going to hand over to Yusuf Otello, who would take us on the overview of Guinea Insurance.
Thank you, everybody. Yeah, so I'll be talking about Guinea Insurance. So currently, Guinea Insurance is a composite insurance company licensed by NICOM to operate as an insurer for all aspects of insurance business in Nigeria. And what they cover currently, as I said earlier, they are currently operating in what's called the composite space in what's called the insurance sector, meaning they do things from motor, fire, life and pension, risk, insurance packages, and other engineering and special risk. The share capital of Guinea Insurance increased to 500 million naira, and their paid up capital currently is at 360 million naira. And their overseas shareholder used to hold 51% majority stake up until when the indigenization policy of Nigeria came up in 1976, in which Nigerians were expected to hold 60% of 60% shareholding in the company and 40% for foreigners. So by 1988, the overseas shareholders had to divest their 40% shareholding in Guinea, which made the company fully owned by Nigeria 100%. Guinea Insurance became operative in December 3, 1958, and currently their outstanding share is 6.14 billion. Now, at the close of market on the 24th of August 2018, Guinea was trading at 35 kobo and the 2-week range was 35 kobo to 0.5 kobo. Next slide. So from here you can see the revenue at the close of for quarter 2 2018. Guinea recorded a revenue of 259.9 million naira and a net income of minus 57.9 million naira, and their profit margin dropped by 22.26%. And their total asset at the end of quarter 2 2018 was 5 billion naira, and their total liability was 1 billion naira. Next slide, please. So, why the merger? Next slide. Next slide. So, why should we actually here on behalf of our clients from Buzuin, and why should Guinea take up this acquisition by us? So, from this pie chart, you can see that currently as at 2016, the product generated was 356 billion naira, and the contribution breakdown is shown in this pie chart. Now, the major objective of this partnership is to fall in line with the policy of NICOM to say, okay, all insurance companies are to recapitalize, and doing that, when we come to, we felt, okay, if we come together, we could achieve more together. Synergy, 2 + 2, 5. So, from here, another reason would be that both firms will remain or get access to the oil and gas market, which will be strictly for tier 1 non-life, and the merger will expose the firm to markets like oil and gas, which currently generates 70 billion. Next slide. Next slide. So I'll be handing over to Deborah to talk about the method of financing the deal.
Following the insights by my team members on the acquisition of Guinea Insurance PLC, we'll be advising mutual benefit assurance not to acquire an 100% stake in Guinea Insurance. Rather, we'll be advising them to acquire just 51% controlling interest in Guinea Insurance PLC. Following the method of financing the deal, we'll be going for a share-for-share exchange, that is equity financing for the acquisition. This is because the total debt, mutual benefits assurance total debt over 5 years has been on an average of 40 million naira, and their gearing ratio also has been well above 50% with the exception of year 2013. So be saying they should go for an equity finance for the acquisition. Also for the financial inclusion, one of the benefits or incentives for the acquisition is to partner with Wallet.ng and Softco in order to make our services known to the market targets of 41.6% of the Nigerian population who do not currently have a bank account but will probably have assets that needs to be insured. Either way, Wallet.ng will enable people to make an asset payment with just the phone number, and also allow the business to accept this payment with just a URL. In addition, it makes our services more accessible and more friendly to those 41.6% of the Nigerian population that don't have a bank account but also have like assets to be insured and all that. Also, we are taking the initiative and step to make use of USSD codes, partnering with Softco to enable people to use our services without the use of internet. Those people that are wary of using the internet because of fraud and all. It also makes it more attractive using USSD code. Meanwhile, we'll be stepping on the competitive edge to make sure that people are aware of the services and more like the company that will only be making use of this USSD codes and Wallet.ng. With this, we hope that no, Jesus, have mercy. No, the synergy, no. We hope that this synergy benefits will be appealing to mutual benefit assurance PLC in order to acquire Guinea Insurance.
Group J, that's last group. 5K. Come on. Out. That's about serious. You guys can put them down.
Yeah, I gave it to this guy. Olumide. I went, that's it. Look at him there.
Wait, your presentation is done for 5 minutes and you're giving like this. No, I don't think you just want to use that.
Minutes enough for this. We presented about 14 slides. Only slide. Baba. Excel. Calm down, calm down, calm down.
Which one do you want?
Everything. Just bring everything.
Okay, your color. Take your color.
You don't want to give me your part. I just need to come from Thank you.
Guys. Are you ready?
Yes, we are.
So good day, everyone. Good day, everyone. So we're members of Group J, and we're here to present a proposal for the acquisition of Guinea Assurance by Mutual Benefit. So, so first of all, we'll start with the background to understand the industry. So, next slide. So we see that Nigeria happens to be the most populated African country, and it shows that it has a large, tremendous, it has a large number of population that can actually get insurance products. So with these opportunities, the major thing that has been hindering this market basically has been the inherent poverty level, which is quite high, and the inability of the populace to buy insurance policies. So go to the next. Then we also gave a breakdown here of the growth as regards the insurance premium that has been bought so far. So we have the life and the non-life. So there has been an increase in the non-life written premium for a period of time now. So you can go to the next one. So Nigerian market, in this context, we see that the penetration rate has been quite low, which is around 0.4%, as compared to other countries like South Africa, which has about 15 to 16% penetration rate. Then the competition in the market is moderate. It is quite competitive, moderately competitive in Nigeria. Then we also have a social outlook, which sees that in Nigeria we have a total population of about 196 million people as of 2018. Then 44% of Nigeria estimated population are about in the middle class range, which are expected to buy the insurance product. So you can go to the next one. So he will be talking about the company overview here.
Good afternoon, everybody. The company overview for Mutual Benefit Assurance PLC. The insurance firm was incorporated in 1995, and we commenced business in the year 1996. The ownership, we have Charles Enterprise LLC, Limited Liability Company, has 26% stake in Mutual Benefit Assurance. We have CI Risk and Asset Management, Multi-Line Insurance, and the rest. The profit for the year is 926.7 million naira. Mutual Benefit Insurance is located in headquarters in Ilikweju, Lagos. We also have for Guinea Insurance PLC. Guinea Insurance PLC, we have it incorporated in the year 1948. It commenced business in the year 1958, and the ownership, we have 26% stakes from Chrome Oil Services Limited. We also have 12% stake in
now from Make Investments Limited. The profit for the year for Guinea Insurance PLC was 251.0 million naira. Next. The rationale for takeover of Guinea Insurance PLC, the first rationale, the reason we are looking at here is the geographical expansion. Guinea Insurance boasts of a 33% market coverage in the eastern part of Nigeria in the country. This is the region where mutual benefit insurance has a little or no foothold. They don't have much insurance coverage in that area, so this would be an advantage for the acquisition. Also, we also have the capacity to take on more insurance risk. In adherence with the directive from NICOM, the acquisition will help both companies to control a robust portfolio to take on more insurance risks in the insurance industry. We also have the increasing capabilities. Guinea Insurance PLC as an insurance firm has been around for over 6 decades and it has a market share of 0.28% in the insurance industry in Nigeria. Mutual Benefit also has been around for about 20 years and has a 33.37% stake in the insurance industry. A report released recently in 2017 placed Guinea Insurance among the top 30 growing insurance firms in the country. Guinea Insurance PLC is fast-growing market share is attributed to their extensive research and technological innovations, which has brought about an increase in consumer base and revenue. We also have the competitive advantage. The acquisition will help both companies to earn a larger market share, thereby eliminating competition and resulting in 65% market share across the country in the long run. And also, we are looking at survival of both companies due to the requirement by NICOM for insurance companies to adhere to their strict regulations. Acquiring Guinea Insurance PLC will help both companies survive and keep them afloat. There's also a synergy between both companies. Both companies have complementary strengths and weaknesses, and this can be leveraged so as to increase their productivity, efficiency, and revenue. Next.
So talking about the valuation. So first of all, we have the football field analysis, which gives a glance to how the company has fared so far, and also looking at other various valuation metrics to show how the value of the firm is. So first of all, we have the 52-week high to be high and low to be ranging from 0.23 to 0.34. Then we have the analyst expectation. So the analyst expectation was 0.33, that's 33 kobo. Then the historical average trading multiples is around 33 kobo. Then the company comparables gave a very low estimate, which is around 29 kobo. Then the president transaction also gave a higher valuation, which is around 35 kobo, which is because of the control premium. So you can go to the next slide. Then, so looking into the president transaction, so we have been able to identify different transactions in the past. So we look at the transaction where the Delta Insurance Company was acquired, then Delta, then Takaful, and so many other insurance companies in the past. So from 2018 to 2009 to 2018. So we see that the mean figure, which is the total enterprise value, will give us a total of the mean figure will give us a total of 12 billion, while for the size we have it to be 1.1 billion. So can you go to the next one? So then talking about the company comparables, looking at the different multiples from different other companies. So we have the average to be 1.5x, 10.9x, 12.5x, and 18.8x. So we are going to be giving a brief profile of our organization. Oh, geez. So this is like a brief background of our company. So go to the next one. Go to the next. So bad. So yeah, so we are globally connected and locally relevant at the same time. We've been able to provide services for different companies across board. Next. So then we have our team. Go to the back. So we have our team. Go to the back. So we have our team, which includes Joshua, that is me. Then we have Victor and the other team members.
So, yeah, so our selected credentials, so the companies we have actually worked with, we have ADAC, Bank PHB, and the rest of the other companies. So, yeah, just go to the next. So thank you very much for your time. Yeah.
Can we start? Good afternoon, everybody. I'm Abdul Basit Shuaib, and okay, we are pitching long on Procter & Gamble. Procter & Gamble is a multinational consumer goods company headquartered in Cincinnati, Ohio, United States, traded on the United States, traded on the New York Stock Exchange, and a constituent of the S&P 500. It primarily focuses on hygienic products, cleaning products, and the likes. The structure of the company products ranges from baby care, lady care, and the likes. We'll be pitching long on Procter & Gamble because of the following fundamentals. Procter & Gamble has an unprecedented history, established in 1837, and has been able to sustain its going concern feature as a large company in the United States, and it currently has about 40% market share in the consumer goods sector in the United States. Procter & Gamble was able to increase its revenue Q2 by 88% to about 66.3 billion, and earning per share 4% to about $4.6 per share.
So we're also going to be looking at the PE ratio and compare it to the market, the overall market, and also its sector and industry. And also we're going to be looking at the PS ratio and also do the same thing. So considering the PE ratio, the trailing 12-month PE ratio for PG stock is currently at 19.4, and comparing it with the PE ratio for S&P 500, which is a constituent, which is about 20.4, is actually favorable. Actually falls in favorable because of it's currently trading at its midpoint. And if you look at for a long-term PE trend, we can see that it's slightly a bit below its midpoint for over 5 years, for the past 5 years. And then if we also compare it to the the trailing 12-month PE ratio for its sector, we're going to see that the PE ratio for its sector PE, trailing 12-month PE ratio is about 23.7. And if we compare it with that, we see it comes in favorable, and which means that it's currently undervalued compared to most of its peers. And then coming to the PS ratio, that's price to the sales, the total sales. So I personally like this metric in comparing most of those stocks, because you can because of its sales, you can hardly manipulate those the sales value with accounting tricks. So when considering its PS ratio, I would say that the PS ratio currently for P&G is currently at 3.3, and as with analysts, it's actually quite better when it's less. And with the PS ratio for S&P 500, it's currently at 3.4, which is marginally lower than its overall. So it falls in favorable for value investors. So on bottom line, I think that PG stock is an inspired choice for value investors, and it had to beat its incredible line of statistics. And considering the fact that it's under a strong industry rank, that is 43% of over 250 industries, I feel that buying this stock will actually be favorable for most investors. So we're going to be, like, considering that we have a $40,000 account, we're going to be risking just 5% of that. We're going to be risking just 5% of that account. That means we're going to be trading we're going to be playing defensive and considering trading losing $2,000, and then we're going to be considering gaining with a risk ratio of 2:1. We're going to be currently targeting $4,000. So if we picked 80 pips out of the market, we are going to be placing our take profit at 4.30, and but it's actually trading at 83.40. We are going to be taking our I'll take profits target at 84.20, and then our stop loss will be half that. Well, that means we're going to be stopping loss at 82.92. So that's for the stock pitch. So for our trading game, so this was, yeah.
So for our trading game, we considered various strategies in order to affect our trade. We looked at the technical analysis, such as the commodity channel index, the stochastic oscillators, the relative index, strength index, and the Bollinger Bands. So we also look at the fundamental analysis. That's like, in order to capture the fundamental analysis, we made use of forexfactory.com. From here, we could see the red indicator showing that the news about to be released will affect the market. So for yellow is to show us that it will affect the market, but not too much. But for red is to show us that it's an important news that will affect the market. So the next slide. So the effect of the news to USJPY, that is US dollar to Japanese yen. This is the point where the news was released, and we noticed a downward trend in the chart for US dollar Japanese yen. Then this is it for the Euro USD. There is an upward trend. For the conflicting diagram in the USD Japanese yen and the Euro USD, because in this case we are buying Euro and we are selling USD, and the other point you are buying USD and you are selling Japanese yen.
So when you're talking about this is the trade afterwards when we bought the Euro USD and we sold the USD JPY. So for the technical analysis, we used stochastic oscillator, which shows the trend and also shows the support and resistance level for each of these pairs. So looking at the GBP JPY, I can see that here is going to, this crossing means that it's about to go to a downward trend, and most times we also use it when we see that the pair is actually overvalued. But this one also shows if a stock is, the pair is overvalued, because the relationship trend index here is actually, when it goes more than 70 is actually overbought, and when it comes down below 30 is oversold. So for this consumer, the commodity channel index, we see that there are a lot of, we also see this when it comes to trend. So there are a lot of reasons why we use all these indexes. These two green lines are the Bollinger Bands. We use it for entry points in each market. So to know when, because there are lots of reversal points and break even points where we would enter the market. But with this thing, we know that, okay, this is the perfect place at which we place our trade. So this may help us to know whether a particular, this pair will actually break a support level or break a resistance level, meaning that when it breaks a support level, meaning that it will go below that support level, and when it breaks a resistance level, it will go above the resistance level. So these are the pairs we traded on: GBP USD, EuroCAD, CHF JPY. So we also considered using other strategies like the naked trading, just trading, trend trading. Most times we notice that using dyno bars, which is 10,000 numbers of 5-minute bars. So using dyno bars, we've seen that. So using dyno bar, we saw that, okay, we could target high pips, because on Mondays, during the study period of the markets, Mondays, Tuesdays, we noticed that there are very high trends, whether it's actually going to buy long or it's going to sell for a long time. So we're considering using trend trading, using dyno bars and V-bar. So
I don't want to go. You? Eh? I'll give them a discount. Good afternoon, everyone. My name is Atakpa Estaidara. Our me is
Precious Olinka.
And I'm holding there, Shadi.
we're pitching General Electric Company stock. General Electric Company is an American multinational conglomerate incorporated in New York and headquartered in Boston, Massachusetts. It belongs to the industrial goods sector and diversified machinery industry. Now, it develops and manufactures products for generation, transmission, control, and utilization of electricity. Traded on New York Stock Exchange market, and for this stock, we're pitching short. Your turn.
So, G is currently trading at $12.50, and okay. G is currently trading at $12.50. It has a market cap of $108.64, and their earnings for based on last year's performance was 124 billion. It currently has an outstanding shares of 89 billion, and its earnings for the year was negative 5.96 billion. Currently, the G has had a negative return year to date of 28.37%, and year to date of 28.37%, 1 year return of 48.7% negative, and it has a 1 month negative return of 4.6%.
Okay, thank you. So now I'll be expatiating on the fundamentals of why we should be going short on GE. So GE posted a loss of $9 billion, and it has fallen. Its market capitalization fell to a sum of 108 billion from 600 billion, which it was trading at back in 2011. Also, its Q2 and Q1 earnings fell from that which the company estimated last year to be a fall in 10%, and it fell in Q1 and Q2 respectively by 15 and 19%. As well, the company has promised to improve on its debt to earnings ratio as of last year earnings call, and it has it promises to do that before the year 2020, but from reports which we've been seeing in fiscal 2018, its Q2 report shows that its debt keeps on increasing to a sum of 118 billion, and its earnings keeps on falling by minus, which Q3 at minus $5 billion. Also, it has experienced an increase in its it has experienced fears in the demand for its gas turbines, and that has led to an increase in its expenses, in its storage cost and its earnings cost, and with this would lead to a reduction in increase in its earnings, and its gaining and improving its debt to earnings ratio by year 2020 would not be feasible. Also, it experienced a hit of 6.2 billion in income loss owing to its long-term insurance contract, which it had with its customers a decade ago. as well. GE experienced serious woes when it was booted out of the Dow Jones Industrial Rate 30 back in June 26, when it fell by 0.30%. So I'm going to be passing.
Hello, I am Adiola, and I'm going to be taking us through our trading history over the past 52 days. 52 days. Okay, actually, this account was not traded with $50. It was opened with $50, but we later upgraded this to $10,000. But our net profit was $1,821. $10,000. So these are our trading history between then and now. I'm going to take us through how we analyzed our currency, our trades before we took them. So we took our trades totally based on price action. We did not use any indicators. Well, we have the 10 and 20 exponential moving averages, but we did not really take note of that. We only used previous historical price history to take these trades and couple the fundamentals. So on the chart here, we have the Euro USD, and we can see that it has been in a free fall over the past few months. So from what you see here, we can see a descending wedge which it broke 3 weeks ago. When it broke the wedge, it came back and retested the wedge. Then, so we took advantage of this free fall, because in technical analysis, when we have a descending wedge like this and it gets broken out, it gets broken, it retests for confirmation and then it's free falls. So we took great advantage of that free fall in our trading. As you can see, we have Euro USD sell. We sold Euro USD a couple of times. So this week, however, this past week, the pair lost, the USD lost some strength, and USD gained some strength and Euro lost strength. So it went back to retest the wedge. However, we are on the sidelines now as to what next to do, because 1.1650 is the key support there, and if it breaks it upward, then we have a bullish. Then we're going to go bullish on the pair over the next few weeks. We have the Australian dollar, US dollar here. This is the weekly chart, and we can see that we have an ascending channel on this weekly chart. However, over the past 2 weeks, we noticed. I say 2 weeks. I meant month. Since we have a descending channel on the daily chart, so we are actually bearish. We are bearish on this pair because of fundamentals. The Australian Bank of Australia has said that they're not going to be raising interest rates for the next 4 years. So we expect. So there's no reason to go bullish on the Australian dollar for now, and of course the US dollar is still strong. So we expect 2 days ago on Thursday we had a fall. 1 minute more. Wow. Okay, so we expect this to. We sold the Australian dollar. We expect this to fall, and we expect to take advantage of the fall of the Australian dollar over till the end of this year. The pound USD also broke a channel. This channel was actually drawn on the weekly chart. That's why it's not. So it broke the channel and it didn't retest. It just came up, and we're actually on the sidelines now. If it breaks above 1.2890, then we go bullish on it, and if it breaks below, then the sell of the pound USD continues. We also have the pound JPY. We're on the sidelines waiting for a retest of 144.02. The pound AUD, we are bearish on that because of the pound and on the uncertainties in the Brexit Brexit for now. This is the weekly chart. Well, this chart is not actually clear because we have a channel here which we are not sure about. If it breaks upward, if it closes above Friday's above last week's close, then we have hold on. Okay.
All right, good afternoon, everyone. We're Talent Nova. First of all, we'll say it's we're really sorry about our trading platform. We're not able to with Group K, Talent Nova. That's our Monica. All right, thank you. Okay, so yeah, we started trading August 1st through August 14th. We were able to gain 200 pips on trading, and part of the things we worked on were the news affecting the USD, the GPY, and the GBP and the JPY. So that was how we were able to gain 200 pips on our trade. Then from August 14, we were logged out of our account, so we weren't able to do anything. We tried all we could. So we're really sorry about that. Yeah. So we'll be pitching our stock now.
Good afternoon, everyone. I am Rihanna.
And I'm Kobe.
We're pitching along on Nike Inc. Nike International Corporation. Nike International Corporation is a manufacturer and distributor of footwear, sports equipment, and apparels. It belongs to the apparel industry. It is headquartered at Beaverton, Oregon, United States. It is traded on New York Stock Exchange and a composite of Dow Jones, S&P 500, and S&P 100 due to the firm's large market cap. Presently, Nike is trading at $82.45 US, and we are forecasting 700 pips increase in the next 3 months.
Exactly, thank you. Okay, so fundamentals for this particular forecast is one, Nike just launched a Queen's collection in collaboration with Serena Williams and Virgil Castro. This collection, as we know, percentage of revenues of Nike comes from the United States. 53% of the sales they have is from the United States. And in the United States, we have 50.6% population of women, that's the working class women, that patronize Nike. And with this collection, being that Serena Williams is a forerunner, I mean, she's one person, she's a model, she's based on that, she's the one that will be launching it, and this particular product is bridging the gap between gym and office. It's a collection that you can wear comfortably at work, and you can also wear at the gym. So this particular collection, with this, we're forecasting a 20% increase in revenue from this collection in the next 3 months. That's why we have that's why we're having a 700 pips increase in our share price.
So also, Nike has introduced a new service which brings them closer to their customers. Their customers can order goods directly from the company. This will enhance the relationship between the company and their customers, and also increase their profit margin at the long run.
Thank you. Also, recently, effective tax rate they've reduced their tax rate from 15.7% to 12.7%. based on the effective tax rate policy of the United States. And with this, their expense is going to reduce. And if the expense reduces, that's one of the drivers for this particular forecast.
Nike recently released their Q2 results, and they had a 3% profit, and they had a 3% increase in their profit margin and also in their revenue due to the increase in their sporting retailing activities.
All right. So based on these fundamentals, like we said earlier, we're forecasting a 3-month forecast of 700 pips increase. So we're entering the market at 82.45 US dollars. We're taking profit at 89.45 US dollars and a stop loss of 81.45 US dollars. Thank you so much.
Thank you. All right, thank you very much.
So good, Jerry. I think very good stuff. Good presentation also. I think one of the things I noticed from the stock pitches was aside from the third. You can hear me now.
Yeah, so you need to hear your side too. Your side.
Oh, okay. So I said generally, I think it was very good, good stock pitches, very good presentations. I think particularly the same thing I had been mentioning during the individual interviews is the fact that I didn't see a lot of people talking about how the macro events have been affected. I just saw a lot of people talking about numbers. Aside from the third group, I think, during the stock pitch, that talked a lot around, that mentioned a lot of fundamental like stuff that was really going on. I felt like I heard too many people talking about numbers, which sometimes could be a bit abstract. Sometimes I feel like if you're pitching stocks, you should be a bit more convincing with your what's up in terms of news. The guys that also pitched, I think the second group, they mentioned the fact that the stock had been going down. They didn't mention the fact that there was a possibility that the stock could have bottomed out, which means that it could have been oversold already. I think you guys should also try and pay more attention to that. But for the trade presentation that was also done, I think for the first group, you guys emphasized too much on too much on analysis. I felt like a lot of attention could have been paid to how your strategies were implemented. We didn't really see that. For me, I saw a lot of high-level technical analysis, but for me, it didn't really translate to a lot of numbers. But I mean, like, it's still quite fair. But I think next time you guys should pay more attention to telling us how those strategies resulted in numbers. Even for the other group, you kept emphasizing on the fact that you were bullish on the markets, you were bearish and all that stuff. But you didn't really tell us how you implemented individual trade that led to successes on those trades, or that led to losses, or probably what you learned from this that you implemented in future trades that helped you to make more decision making, or to help you improve your decision making activities. But generally, I think I think it was very fair presentation. Yeah.
So, what's been presented or general? It's not quite we are not able to think that yeah. So just general feedback for those on the guys. When you have to pick the score, try and pick a company that is as simple as possible to explain. When you came out and you said you wanted to pick the guy, because he's a very, let's say, complicated, and there's no one about the video. It's a very complicated company. They have different businesses. So there's the G Capital, there's G Power, about the company? How would you go about it? What would you say is driving, say, popular or what company as a whole? To stay away from companies that are a bit complicated. And another piece of advice I'll give is don't go with a company that is so popular. Because if that company is so popular, chances are people know about it. And if people know about it, chances are they tell them this stuff, they question because nobody knows about the company. I'll give my experience. So when I was very writing, after my program, I think I was writing the system to global market. When I did the global market, I did a not like 3 years ago, so the request for coming out in global market. And I was completely explored. And then what I did was, what everyone would have done that would have been to look for say all the popular companies, Facebook, Google, what have you, Amazon, and the rest, and Facebook. All have been very appreciated. How I went about it was to look at, because it was about that period of time that I was from, I think, inside of something like that. And then we were talking a lot about politics, and politics. What I did was to look for industries that were going to benefit from the milestones that policy. And then if I was able to like identify the industry, I was gotten like a reason why I picked a shot in that industry, or now the like federal government that I do. What I did was to look for an industry that benefits from favorable policies. And then within that industry, what I did was more or less for a company that is doing well, but that is not so popular. So the industry I ended up picking on, I think it was the semiconductor industry. And what was my rationale for that? So I don't know, a lot of us have been learning about virtual reality, augmented reality, like it's picking up steam. And then the company I picked was IMAX technology. I'm very familiar with none of you have heard of that company. So IMAX technology happens to be a company that is developing like processors, semiconductor chip that will be used by Facebook, Google, and what have you, and develop like augmented reality devices. So you see, my story is like compelling. It's interesting. So now, if I were to click then I'll tell them what I'm getting, I'm not getting them. They'll do that for now you're going to tell them about IMAX technology, and they're going to answer me this from based on what you say, they will now ask you questions. So I'm going to teach you Facebook or very good. I know what you're talking about. You guys live probably London or US, you get the app. So you guys are in very good. Now start saying this and saying this, but you turn them off that by telling them you want to fix your IMAX. Now they pay attention to you. IMAX is a semiconductor company, blah blah blah, exporters, blah blah blah. They are very well in their industry, they have to do and take care. And IMAX is very, very simple. It's a very simple company. So there's nothing complicated about that. Or what drives their, or what will drive their, what drive their revenue going forward? What will drive their revenue in the adoption of augmented and virtual reality? How do we know this? I think I posted a report or so that said that in the next 5 years, 2020, augmented reality or virtual reality devices will be employed like 600. And these guys are predicting what you need for augmented reality. It's immediate transaction. I think in our future, I will come right now. So the core of the story or everything I'm saying, don't usually go for this. Like, don't go for this very popular. Because people, they know about it. And without that, you can have no question to ask about it. And come over the market. So go for a company that is really market. That's very simple. And that's not so popular. So when you're telling me about a company, they are something. You can even take a company in Nigeria. I know they will look for Dangote and you might not Dangote, but you might not they haven't been a very, very good company in Nigeria. And then they're telling you and telling how they feel Dangote, they can't argue. I feel this company. I know how the market is from information. And then you have the mission of grand company like government. And then it makes sense. As opposed to G or one test commercial or one pharmaceutical company in the US, and then they start entering from there. So, yeah, that's what
Thank you. Just a little add on to what you said. Similarly, I don't know if anybody knows this. Similarly, to pitch a similar company to my one, pitch Qualcomm, which does semiconductors. So I don't know if you guys have a discussion before. I mean, she did Qualcomm and she got the so for IB guys, I'm just going to go into the score. So we have how will I call it? We have a tie. We have two people on the same point. They both got 92 over 100. So, group B. What's the group? Please stand up. Group B had 92%. Group C had 72%. C had 72%. Group D had 75%. Please round of applause. Group E had 92%. Group I had 79%. And Group J had 73%. So we have a tie. Group B and Group E. Where are they? Please just send one representative forward so that we'll break the tie. Send one representative forward. Group B and so Group I came forward, right? So Group B and Group E had 90% each. So we had the tie. 92% or 92. Group B and Group E send a representative so that we know who send your rep. How do you? Is it your laptop or the iPhone as a price? No, it's Talentmine. I'm ready. Please, can I just drop it? Okay, so both of you, first question, just walk us through your representation of how you are. Yeah? Who's doing first? I have 5 minutes. Yeah, but we didn't everyone want to be. We are Group B Project Capital Limited. We pitch an acquisition of Gain Insurance PLC by our client, which was Gain Insurance PLC, the management of Insurance PLC. And in pitching this company, we looked at the various the current market and what is happening now in Nigeria. They will move on to analyze the industry to know the structure of the insurance sector in Nigeria. And from there, we moved on to why the insurance firm should accept to be acquired by mutual benefit insurance or mutual benefit insurance PLC. And we established the role of synergy, diversification, and the need for companies to meet our regulatory requirements that will be slammed on the industry from January 2019. Then, based on our valuation, we use relative valuation. There's two main multiples: the price gross written premium multiple and the price to value multiple. And all of these, we established that the insurance sales is currently overvalued in the market, as was trading at the type of what when the valuation took place on the 18th of August. And based on our valuation, it comes actually worth between 7 kobo and 30 kobo. But despite, regardless, we accepted insurance PLC is ready to pay 20% premium based on the share ownership by the insurance PLC. And that's amounted to an acquisition price to gross premium of 2.6% and an acquisition price to value of 0.4%. And we pay an actual acquisition price per share of 42 kobo called insurance PLC. That would advise we are giving our clients insurance PLC. And based on this, we hope that we advise our clients to finance acquisition by 10% cash, that's 2 billion naira. Issued debts of 40% naira of 1.03. That's 1.03 billion naira, and the rest will be the stock swap by issuing stock to the current shareholders from the insurance groups. We identify the fact that there are 3 parties to the deal. Ours of the advisors, the legal party, and the legal party, and the management of the insurance, and we establish the role of each of these parties in the transaction. And if all parties carry out their function very well, we expect the deal to be consummated within 6 months between September and February next year. Thank you.
Of course, you are. Acquisition of First game and review of industry, and we highlighted that insurance industry in Nigeria has totally upward trend, and the CAGR has been going up. We need to above 10%. Then we talk about the top players and the bottom players in the insurance industry in Nigeria. We identify these players the first and largest insurance company with market share. Then we have identified user benefits to be the 10th with a market of about 3%. Then insurance has a market share of about 0.5%. So insurance is out of the bottom 10. Then we went on to give an overview of the acquirer. The acquirer is user benefit insurance that has been operating for a while in Nigerian insurance space. Mutual benefits operates life insurance business and also general or non-life business. They have their market price is priced at about the market share is priced at about I think per share. Then you also talk about Guinea insurance, give an overview of Guinea insurance. Guinea insurance was actually established with the majority shareholder ownership by foreign companies. They also gave their market price at about 35 kobo. They went to valuation. We said we not perform an valuation on Guinea insurance because Guinea insurance are not been posting dividends been paying dividends for about 4 years now. So we did the relative valuation. So we did the valuation and we did the display transactions. So the valuation what we use was the price to book value ratio. We use the price to book value ratio on insurance, financial companies, insurance and banks. This is because those financial companies, the bulk of their operations is on their balance sheet. Because they always they have large assets. So price to book value of the company is the balance sheet of that particular company. So with our price to book value multiple, okay, before I talk about multiple, we give an overview of performance of performance of Guinea insurance in the Nigerian stock exchange. Guinea insurance for 2014 to 2018 was operating at a share price of 50 kobo per share before dropping a little bit to 0.35 kobo per share. So this is due to the NSC institution of the 1 kobo rule. Then also their price dropped again by 6.57 billion naira. That's the second quarter, which further dropped their share price. So the price book value, which is not used as the multiple or the comp valuation. Our presentation gave the range of 0.40 to about 1.47 kobo. And our comp gave the range of 0. I'm not sure if that's right. Okay. So we talk about our take about that we want mutual benefit to acquire. Okay, let's talk about M&A opportunity. And there is consolidation, like two companies can come together and form a new company. They talk about tender offer in case the management of the insurance don't want to sell, then mutual benefits can go and buy the stock from the shareholders at a very high premium. And we also talk about acquisition of assets that mutual benefits can buy that can purchase the asset of insurance. They talk about takeover rationale. We identified one of our rationale identified as follows: synergy and the company will the company's operational efficiency will increase over time. Then we talked about growth rate. The company grow at the rate of about 13% like over time. Then we talked about mutual benefits that was trying to the engineering insurance business. Then we talk about takeover financing. And you can finance that takeover by either cash or by stock or a combination of both of them. Thank you.
So I'll give without time. I'll give general feedback, like specific feedback. So for group E, I really like the content of their presentation. Like they really took, I felt like they took their time rather to understand what the business is. That's why they were able to, when they're talking about the rationale of what's the mutual benefits are fine. When we talk about like the engineering business, if they are not doing their research, we never would have found out that mutual benefits is found to like expand their business by finding insurance. And then for Johnson, so I like the fact that they also took their time to like really prepare. I mean, you guys would have agreed that when I told them to come out to come and give that presentation without looking at the book, he was still able to give it like very well. If you didn't know, not holding the book, of course, it was able to make something. So it seems very, very difficult to think and want to move out quickly. We want to decide when so group B now. That's no offense to group.
Okay. We got for which winner? Okay. So for S and T.
Okay. Let me just very quickly give. We have a tie, so we don't have a tie. We almost have a tie. We almost have a tie, but very not today. Okay. We don't even want to get in out of the final, like the stuff or whatever.
Yes. First of all, we traded from April to April for the first half of August. Yeah. Person in charge of our account, let's say just we said they don't know some of our accounts. So we kept on asking him, okay, how do we go about it? After during that period, I was not good. Like I wasn't good. So I kept on asking him, I'm sorry. He said he didn't give us any reply. Kept on asking him.
Because I mean, like, by the way, I think you guys had I felt like you guys had a best stuff. Because you said a lot of stuff that were really good. Like you mentioned numbers and I mean, like, what Lovely said, I guess I actually just told you guys about not teaching super over stuff, right? Yeah. I told you guys, my assumption was that you guys knew, because I mean, I gave a lot of you guys feedback during the usual and my assumption was that you guys shouldn't really be teaching about that. But I thought the intention was if you guys had you guys probably want to. So obviously, my winner is Group G. The reason I chose, the reason I chose Group G was just because of the fact that, I mean, if you were to look at their trading, I think both Group G and were age didn't have necessarily a very brief stock pitch. They were very, very hard to talk about. But for
the trading that you guys do. I think you guys employ a couple of techniques that it's easy to be able to identify your trading strategy. It's easy to be able to identify your leading to a trading software. I don't think you guys make a lot of money, but you guys make money through closing techniques. For the other group, it's very difficult for me to identify which strategy you guys do. You guys put in a lot of trades, then it's easy to have felt that a lot of them were trial and error. I couldn't really identify at what point you guys made what decision, and if your decision made or your profit was due to the law or due to your trading technique, and again, that's why I went to yeah. That's all.
Right, thank you so much. Alright, yeah. Hello, everybody. Hi. No, I have to just take some but before that, yes. Yes. Okay. So the first group that won the I guess that's the one we have. There's a prize for them to come there. No money. It's something. I think you guys have enjoyed this exercise from the first day. I don't know why it's not it's not as well something like that already. When I did an amazing experience first day for a room and back this time. Okay, I just did this to shine again. I'll say we had two amazing people, two extraordinary, almost proud ladies. Super awesome. Adiola and I think they have something for them. Oh yeah. So before we leave now, take our great job. Yeah, so before we leave, let's speak to outside. Now, yeah.